It seems like nearly every day the market is swinging up or down by 5 percentage points or more. And individual stocks have often went up or down by 10% or more in a single trading session. Now, if you're like most investors, these up and down swings can lead to anxiety regarding one's investment portfolio. However, the good news is that there is a time-tested investment strategy that almost guarantees you will build wealth over time. Now, I say almost because nothing in life is 100% except taxes and debt. But this technique is called dollar cost averaging, and it's been highly successful over a long period of time. So you may be wondering, what is dollar cost averaging? Well, in a nutshell, it's a simple investment strategy that will help most people build wealth over time. Alright, so dollar cost averaging is the process of investing the same amount of money in a particular asset over a consistent interval of time. So Joe, with the dollar cost averaging method, you invest the same amount every single time, regardless of the asset's price. The goal behind dollar cost averaging is to reduce the effects of market volatility. By the way, if you're enjoying the video so far, do me a favor and tap that like button. It really helps me out a ton. Now, truth is, there are a ton of businesses every day that you can buy on sale. So you may not be able to buy the whole thing, but you can certainly buy a piece. And a small piece of the right business at even better prices will make you money over time. So even after you buy into a business, you want the price of the part you don't own, the part you haven't bought yet, to go down. That's right, down, not up. If it goes up, we do good. If it goes down, we get rich. Now, I know that sounds crazy, but remember, our net worth is not about prices, at least not in the short term. Our net worth is about value. If prices go down, but we know what we're doing, our net worth is going to go up big time. The biggest advantage to dollar cost averaging is that it spreads out your risk. For example, let's say that you had $1,000 to invest in a stock that's currently trading for $100. Now, if you invested all of your money at once, your $100 would buy you 10 shares. But let's say that you divide your $1,000 into 4 equal investments of $250 spread out over 4 months. Here's an example of how things could play out. So in this example, you would end up with 11.34 shares instead of 10 shares at the end of the 4-month period. Now, those 1.34 extra shares would also mean extra profit for every dollar of future stock price growth. So that is the potential benefit of spreading out your risk over time. Now, a second advantage to dollar cost averaging is that it can remove emotion from the investing process. Truth is that just because a stock or fund has dropped 30% this week does not mean that it's going to rebound by 20% next week or even next month or next year. Trying to time the market, trying to guess when to hop in and out of stock positions is tough, even for investment professionals, much less the average Joe. But we aren't the average Joe, are we? Anyway, Joe, another added benefit of dollar cost averaging is that it can keep you from panic selling when the market is acting wild. And to be honest, it can also help you resist the temptation to go all in on high-risk speculative investment. Now that we've talked about the benefits, let's look at some cons of this investment strategy. So one of the downsides of dollar cost averaging is that the market tends to go up more than it goes down. So let's revisit our earlier example, but this time we'll see how dollar cost averaging can hurt you when the market is trending up. So as you can see, you would end up with 9.04 shares after the 4-month investing period instead of the 10 you could have had if you'd invested all of your money at once. So what this example shows us, guys, is that while dollar cost averaging acts as a great hedge against bear markets, it will tend to underperform lump sum investing during long bull market periods. Long-term S&P 500 data shows that bull markets have historically lasted longer and have been more pronounced than bear markets. So as you can see, the dilemma with dollar cost averaging is whether an investor is willing or even able to put in more money at exactly the time they most need to. Again, trying to time the market is always a risky game. For example, in 1930, a $500,000 portfolio went to $75,000 in 1 year. How many people had more money to buy in after that? So you may be wondering, is this the investment strategy right for you? And I would say it depends on your particular financial situation, but for the vast majority of people, it's a safe long-term investment strategy. Remember, there is a reason why it's called personal finance. I say that because truth is that many people don't have a lump sum of money to invest. Instead, the vast majority of people plan to budget a certain percentage of their income each month towards retirement, savings, and investments. And for these slow and steady investors, dollar cost averaging their monthly contributions is a great choice. Now, even if you do have a lump sum to invest, dollar cost averaging could be a smart move during tough times of high market volatility. Another added benefit is that you may find dollar cost averaging reduces your anxiety around investing. And can you really put a price tag on your emotional and mental health? And I can't stress the importance of just getting started. There's something empowering about telling your money where to go. So by investing, you're giving your dollars a job to do, which is to make you wealthier over time. All right, so there you guys have it, a breakdown of what is dollar cost averaging and some of the pros and cons. Comment below and let me know your thoughts about investing and specifically dollar cost averaging. Also, if you found value in this video, do me a favor and tap that like button and share it with others. It really helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Thanks again for watching, and until next time.